turn our attention to the auto financiers, which have been under stress for most of them. In fact, the AUM growth, disbursements, net interest margins have witnessed a decline. So is the pain cropping up, and till when will the slowdown last for auto financiers? To discuss this and the way forward, Umesh Revankar, Executive Vice Chairman at Shriram Finance, is with us on the show now. Thank you very much, sir, for joining in. First, if you could talk about, have you seen a slowdown at your end, and what is the outlook now for the second half of the year in terms of AUMs, disbursements and growth?
Yeah, good morning. We have not really seen any slowdown in the credit demand. The credit demand has been steady for us, and I feel even the festive demand was quite good across the urban and rural. So two-wheeler or tractor or even passenger car demand has been reasonably good. So we feel that we'll continue with what we have done in the first half of the year, that is around 17 to 18% growth. Minimum of that is possible because the second half looks a little more better in the rural, because rural there has been some buoyancy with the crop being output being higher, agri output being higher, and MSP definitely has helped.
Right. We've spoken to a bunch of credit rating companies, etc. as well, and a lot of the other auto financiers who did say that there was some pressure on disbursements and they did see a decline in their AUM growth rate. But maybe that has to do a lot with fresh cars as against used CVs. So I just wanted to understand a couple of things from you. How have the prices in used CVs trended over the last couple of months? How are they expected to move going forward? Because a large part of your AUM growth has also come in from the price increase as against, just volumes. Yeah, the price increase over the last year, if you see, it has been quite good. See, like over the 3 years, if you look at prices on an average has increased by 30-35%. That has really helped us in our volume growth. But at the same time, the further increase in price in last 6 months has not happened. That means the inflation and the technology upgradation that actually increase the price, it will no more help going forward in the next year. Next year, the numbers have to go up. So I believe that there will be good demand as the government spend increases. Because right now, in the last 6 months, one thing that has been a little muted is the government spent on the infrastructure. Once that happens, there will be a much bigger movement of goods. So the 17 to 18% growth that you foresee in the second half, how much of that would be price-led? How much of that would be volume-led? It will be mostly price-led. This advantage will be there for this full year for us.
Okay. So Mr. Revankar, we've discussed growth. I want to spend a couple of minutes now understanding what your view is on the whole worry surrounding potential asset quality issues building up. Right now, it's an MFI. We've seen what MFIN is doing. They're talking about, making lending norms more prudent, and it's great to hear that. They're looking at limiting the number of lenders a borrower can have, or the number of loans one can have. Now, while, of course, CV is a big part for you, you do have exposure to the MSME space, to personal loans. Incrementally, do you see any sign of distress, any delay in payments building up? So far, till the second quarter, your asset quality has been absolutely pristine.
I don't see any kind of deterioration in the MSME lending. It has been doing well. And all our MSME lending, most of them are against the collateral. So we don't really see that kind of a situation. But personal loan, our portfolio is very small. We have not seen any kind of deterioration there because we lend to our existing customer only who have repaid. That means the customer has a track record with us and they're not new to us. So to that extent, we are safeguarded on personal loan. But overall, if you see, wherever there is an inflationary tendency, the personal loan over the period get deteriorated because people borrow more for consumption, and that will get into a challenge if further borrowing becomes a challenge. So that's a natural, wherever there is an inflationary tendency, that a personal consumption loan can get into problem if the further getting loan becomes difficult. So that is a situation probably there in certain markets, but not exactly in all market. In few geographical location only we see this tendency.
No, the worry, sir, was that, if someone, and borrowers are spread across different institutions, right? And even if there's an MFI borrower or a rural borrower who's taken multiple loans, maybe personal loans, maybe even an MFI loan, and also a CV loan from you for a two-wheeler, etc., and whether, it's a domino chain, whether it starts impacting the system across the board. So you're saying no such issues. So just some guidance on credit costs, on asset quality. I mean, as of the second quarter, you were at about 5.32 gross NPA. How do you expect to close the year, credit costs and asset quality?
And let me make it very clear that people who take loan from the microfinance are never the customer with us, because person who takes loan on asset, buying a two-wheeler or a vehicle loan, he will never have additional loan from a microfinance company. That's not the case, because they are two different set of customers. However, I should say we are confident of improving on our credit cost. Already our credit cost is around 1.87, and we are quite confident that we will be able to maintain it below 2 throughout the year.
Okay. So you are, hopeful to maintain your credit costs below that. You've been also slowing down, sir, on gold loans. How do you, and even personal loans, how do you expect the growth rate for gold loans and personal loans to pan out from here?
Now, we are very confident that gold loan will grow in our book, because we are making more branches to do the gold loan, because we need to build a branch with some kind of a safety standards for making the gold loan. So we are actually adding more number of branches to gold loan. So therefore, we are confident of increasing our gold loan portfolio. Same may not be the case with the personal loan, because since we lend to only our existing customer, it may not really grow. Last year it grew because it was from a low base, but this year onwards it may not really grow in a big way.
Right.
So is there any guidance that you can give on gold loans at least? You're saying it's going to grow. Are we looking at low single digits, high single digits?
No, it will be definitely double-digit growth.
Double-digit growth.
All right, double-digit growth. Just a two-part question. One, since you lend only to your existing customers itself, I wonder if you've done any analysis on how the indebtedness of your customers has changed over the last couple of quarters. Are they more leveraged now versus earlier, or the level is the same? Just that is one. And secondly, going forward, what are the kind of margins that you would make on the loans that you would give? Because you've been doing well as against everyone else in the industry. What is it that you do differently?
See, basically, when we look at the credit bureau, credit bureau reporting, we do see some of our customers having gold loan outside beyond Shriram. Otherwise, we don't see them borrowing from any microfinance company. Definitely not the vehicle customer, whether it's a two-wheeler or the commercial vehicle owners. So the indebtedness is limited to gold loan, which is a short period loan, and which definitely get repaid within 3 months to 6 months. And the multiple loans which we try to factor in the first-time borrower, that probably would have borrowed from the informal sector, which we may not get reported, but that we try to do with a credit check by visiting their home and see whether he has borrowed from any other source. And normally we make it doubly sure that he doesn't have any other loan outside, and then we lend. So generally, we are very clear that customer is has not taken any other loan before taking a loan from us.
So finally, okay, so your point on asset quality, checking the sort of, the health of the borrower, all very well taken. Finally, two big numbers, FY25, AUM growth expectations and margins, net interest margins. Where do you think you'll hold them?
The growth would be around 17-18% AUM growth. And margin, we would be able to retain at a particular level. We were trying to be at present level, which is around 8.79. And we should be able to hold it for the full financial year.
All right, take that point. Thank you so much for joining in and giving us the outlook